Do you ever wonder how stock markets went from being exclusive to a few merchants under a tree to the multi-trillion-dollar system we rely on today? It didn't start with Wall Street or even the NYSE. Let's go way back to where it all began. Stick around, because the journey might surprise you. Hey there! Today we are diving deep into something you might think you know, but there is a lot more to it: the stock market. It's been around for centuries, shaping economies, driving innovation, and changing lives. From coffee shop deals to today's algorithm-driven trades, we'll explore how this all started and where it's going. Most of us interact with the stock market in some way, whether it's through a 401, trading apps, or simply watching the news. But have you ever thought about how it works or how it got here? The reality is, a lot of people are confused about the stock market's origins, how it evolved, and why it's become so vital to our global economy. And let's be real, it's easy to get lost in the jargon and complexity. So, how did we get from small, local trade systems to an interconnected global stock market that affects your daily life? Let's start with the basics. Trading didn't just pop up overnight. Long before we had official stock exchanges, merchants across Europe and Asia were already trading goods and lending money. In places like Antwerp, Belgium, by the late 1400s, merchants were buying goods and hoping to resell them at higher prices, similar to how today's traders buy stocks, hoping for them to rise in value. And that's where the concept of speculating began. But it wasn't until 1602 that the first real stock market was born in Amsterdam. This is where the Dutch East India Company became the world's first publicly traded company. Investors could buy shares of the company, hoping to get a piece of the profits from their lucrative trade with Asia. It was a huge shift. For the first time, you didn't need to own an entire business to make money off it. You could just own a part of it. Fast forward to 1792, and we get to the birth of the New York Stock Exchange. The Buttonwood Agreement was a pretty simple deal between a group of merchants who agreed to trade stocks and bonds under a buttonwood tree on Wall Street. That simple handshake agreement evolved into the largest stock exchange in the world. And fun fact, the first stock exchange in the US wasn't even in New York, it was in Philadelphia, in 1790. While the NYSE started with in-person trades and handwritten stock certificates, it wasn't long before technology revolutionized the process. In 1867, the first stock ticker was invented, allowing real-time updates on stock prices through telegraph lines. By the 1970s, we saw the introduction of the NASDAQ, the first electronic stock exchange, which eliminated the need for physical trading floors altogether. Fast forward to today, and trades are often made in fractions of a second by computers using complex algorithms. Of course, the stock market's history isn't all smooth sailing. Some of the most defining moments include the market crash of 1929, which led to the Great Depression, and the 2008 subprime mortgage crisis. These events showed just how interconnected the stock market is with our everyday lives. But despite the ups and downs, the market has always bounced back, proving its resilience time and again. So, what does this all mean for you? Understanding the history of the stock market gives you a huge edge. It shows that while markets fluctuate, they evolve, adapt, and ultimately grow. From simple trading posts in Belgium to the global exchanges we see today, the stock market is a testament to the power of innovation, risk, and resilience. We've come a long way from trading goods in medieval markets to trading stocks on apps like Robinhood. The stock market is more than just numbers on a screen. It's a living, breathing system that shapes the world economy. Knowing its history helps you understand not just how to invest, but also why it's so essential to our modern lives. Hit subscribe to stay ahead of the curve, or check out our next video to dive deeper into how stock market crashes really happen.